So a little bit about me. I apologize to those of you that have already attended webinar 1 and 2 because you're going to be hearing all about me again, which I don't like to talk about, but here we go. So I've been an owner either through partnership or outright ownership of an accounting firm for about 25 years. Of course, I worked in the accounting industry prior to that. I've owned multiple other businesses, including farming, CNC machine shop, textile company, grocery store, and I've worked for a large variety of clients. I've also been the CFO for a private equity firm here in Calgary. So, what did we talk about in webinar 1? We talked about the why. Why is it so important to remove yourself from the day-to-day work? We introduced the how. We introduced the 4-step delegation system, and we talked about steps 1 and 2 in webinar 1. So step 1 was changing your mindset, and step 2 was what to delegate. And we did provide a template on how to do that. Again, that will be available on our website. And lastly, we talked about organizational chart versus accountability chart and why both are really important. You need to have both, and they both serve different purposes, but both are critical to the success of a law firm, in my opinion. All right, then moving on to webinar 2, we talked about building systems and SOPs. So we continued on the how, and we talked about step 3 and 4 of our 4-step delegation. So we talked about roles and responsibilities of each position, and again, why that's important. Melanie, who's on the Crescendo team, talked about standard operating procedures and how to create those and how to document them and why they're important. And lastly, we talked about the proper tech stack. So if you want to have an efficient firm, you want to make sure that your tech stack is efficient as well. The last thing you want to do is, if there's a change of address for a client, you have to go in and enter it 3 times in 3 different softwares. So integrations and so on and so forth, and building bridges between those softwares is also important. All right, oops. But today on webinar 3, we're going to talk about profitability, compliance, and peace of mind. That's going to be our focus for today. And the agenda, we're going to start talking about a little bit about corporate structure. We're going to introduce something that probably most of you, if not all of you, have not heard of before. So hopefully you'll find it useful, and we'll go into that. We're going to introduce capacity template. So this is more, we use this as a capacity planner and also to determine the efficiency of your firm. So we're going to talk a little bit about that. We're going to discuss expected ratios between sales of service, overhead, and profit. We're going to talk quickly about CRA compliance, what the CRA wants, what they require. Most of you probably already know about Law Society compliance, but we're going to touch on that as well. And then we're going to talk about marketing for growth. What kind of your first steps for marketing for growth for your firm? And the last thing we're going to talk about is, what does peace of mind look like? All right. So let's get started. Let's get started with the structure. So what I'd like to introduce is a concept called deep and narrow teams. Now, this is something that we use at our firm, and we've used at other firms as well, law firms. And I'm not going to go into a lot of detail on this because this is a webinar series all on its own, just talking about this deep and narrow teams. But essentially, the concept of it is you're putting people in the positions that they enjoy doing, in the roles that they enjoy doing, and that they're going to be successful in. So the first one I'll talk about is senior client manager. Now, this oftentimes can be a partner, but it doesn't have to be. We have people in our firm that are not partners that are excellent senior client managers. And what is the role of a senior client manager? Well, they're cultivating relationships with the clients, and specifically A and B clients, A and B class clients. So these, of course, are your top clients. And what are they doing? They're maintaining a high level oversight on profitability and compliance. They're delivering the final product to clients. So what's important to hear, for you guys to hear, is they're delivering the final product. They're not preparing the final product. Okay, you've got a team that's going to be doing that. They provide leadership training to the senior production manager and to the assistant client manager. And they do very minimal file work. Okay. Their purpose is to build relationships and growth and find new clients and really cultivate that relationship. Then quite oftentimes, as your team continues to grow, you would get an assistant client manager. And for them, they're managing doing all the same things, but they're managing the C and D clients. And the difference with them is they do a lot of file work. Okay, there's not enough of a function for two client managers to do 100% client management function. So typically around 60% of their time is actually doing file work, and only 40% is doing client manager. The reason it's really important to have an assistant client manager once your team gets to a certain size is that now you've got a pool of people to choose from when you have to start your next team. Okay, so this structure allows for growth to start the next team. Because one of the things I want to say about this team structure is once a team has achieved a certain revenue level, you want to start another team because you don't want to overwhelm your senior production manager and your senior client manager. And what that leads to is poor service to your clients. So again, assistant client manager, you want to start training them early to be able to start the next team when the time comes. The next position is senior production manager. So senior production manager, it's listed there, but they manage the workflow for all files. They oversee technical legal work. They review final product or accuracy and compliance. They provide ongoing training. I don't have to read all of this. You guys can read it for yourselves. But essentially, they're managing the team of grinders. We call them grinders. Those are the people that are doing the file work for primarily. So your senior production manager might do some of the higher level file work, but their primary role is to support the grinders that report to them. Okay. And then, of course, your grinders are doing the file work. So you've got typically your associates, your paralegals, articling students, legal assistants, those sorts of things. What's really important in this structure is that there's no bypassing. And what I mean by that is if a paralegal goes and asks a client manager or a senior partner that's not even part of this team a question, that senior partner or that client manager needs to refer them back to the production manager. That is how you're going to be efficient in your firm, and you're going to get the people focused on their roles and responsibilities. It's going to provide time for the client managers to build those relationships with those clients. That's the function of this structure. So if you start bypassing, guess what's going to happen? Those paralegals are always going to they're going to bypass the production manager, and the client manager will not have time to do what's important in that role. So that's all I'm going to talk about for now for this structure. Next, I want to talk a little bit about team capacity planner. So this is a concept where we can start to determine the efficiency of your accounting firm and also monitor what each team is doing. So you're going to have a team capacity planner for every team in your firm. I forgot to mention when you start creating these structures, these teams, you want to try and restrict to one or two areas of law. So every team structure, every team that you have is going to practice only one area of law. So if you're doing real estate, you have a team for real estate. If your firm is also doing family law, and you're large enough, of course, then your second team might be family law, and you continue to grow your firm that way. So in this example here, I called the team. You typically give it to your team a name. I called it Herald Real Estate, and in the prior year, they had $1.295 million of revenues. That's actual fees. And the breakdown of those fees was legal fees and then the other fees. Like as a law firm, you're always charging for some administrative costs as well. So they had 1.25 million and then another $20,000 of fees for a total of $1.295 million. Then we put in a number of what they expect to grow by. So on the legal side, the budget that was prepared, they're expecting an extra $125,000 of legal fees that they're going to bill out, and about another $1,500 of other costs. Now they're also losing a very large client that they've had for a few years, so they expect to lose about $20,000 from this client on an annual basis. So the forecast for this firm is $1.376 million. That's what the forecast is for 2026. Then we continue through this template and we start to enter those people that do file work, that have billable time. Okay, so you can see here that George is the first one that I have listed here, and he's your assistant client manager. So remember what I said, they typically do about only 40% of their time is a client manager role. The rest is a grinding role. And what I mean by grinding role, again, is working on files, doing file work. Okay. So you can see here, we put his productivity at 50% of grinding work. And the reason we do that is 40% of his time is going to be spent on client manager. And the other 10% is meetings that are not, you always have meetings or time in your day where it's not billable. It doesn't have to do with client manager and it doesn't have to do with file work, but it's still not billable. So that's why we've set his productivity at 50%. And that can vary from one firm to the other as well. So this is not set in stone. You have to set these for your firm and what works. So you put in a salary, you put in the number of working weeks. Now you have to allow for vacation time, holiday time, etc. So you have to allow for that. That's why we've only got it at 45 here. And you put the number of hours per week. Once you do that, you put in his charge rate, and that tells you what the capacity of this individual is for your firm. How much revenue should this individual be able to generate for your firm? You go through every position in the firm that is a grinder, that does file work. And it'll do the same calculation for each individual, and then it'll end up with a total team capacity. So your total team capacity based on this capacity planner is $2.1 million. So now if you go back and you compare your team capacity of 2.12 million to the forecast of 1.376, you can see you're under capacity. You've still got capacity for $745,000. So you've got 35% spare capacity. So this tells me that you have room to grow. Now, if the people in the firm feel there is absolutely no way we can add that kind of revenue, that tells me there's something wrong with the efficiency in the firm that needs to be fixed. That's what it tells me. But if the team feels, yeah, absolutely, we've got time to do more work, we should be able to pump that out, then maybe it's time to start marketing and getting more business through the door. So this is a tool that's used. Again, I'm not going through all the details, but it gives you a little bit of a concept of the analysis that we would do, or you could do yourself, in terms of how efficient your firm is. And once you get down to about a 10% spare capacity, that's when you should start looking at creating that other team, because your team is getting too large, and your client work is going to start to suffer, and you're not going to be able to deliver the service that you want to deliver. All right, moving on to target ratios. So this is just an example. Let's say you have a firm that's generating $1 million of revenue. The total cost of sales should be approximately 40%. Again, this can vary depending on the area of law that you practice. This is just a general rule of thumb. A law firm that's focused on litigation is going to have very different numbers than what these are. But if you're doing family law or real estate, this is a general rule of thumb that 40% of your revenue should go towards salaries, and that's the salaries for the team structure that we just looked at. Okay, so these are the grinders, your production manager, and your client managers. 40% of their salaries. So that gives you a gross margin of 550,000 or 55%. Your overheads should be approximately 25% or $250,000. That leaves a net income for the partners of $330,000 or 35% of the revenues. Now, again, these numbers are not set in stone and it can vary. And if you've got a capacity of 35%, like we showed in the previous screen, you're not going to achieve these targets. You've got room for growth. And as you grow and you get down to 10% capacity, then you should be getting closer to these numbers. So these are things that you should work towards. But in reality, if your firm is growing, it's rare that you're actually going to hit them. But it'll set the targets that you should be aiming for. All right. Moving on to CRA compliance. I'll go through this pretty quickly. I think most of you are probably aware of it, but I'm going to start with payroll. And when you have payroll, you can have different remitter types. And what I mean by that is if your firm has less than $1,000 of remittances, so you'd have to have a pretty small payroll for that, you can actually request to be a quarterly remitter. So you actually only have to report and remit your payroll remittances on a quarterly basis. If you have between $1,000 and $25,000 of remittances, so now you're getting to be a pretty substantial payroll if you've got $25,000 of monthly remittances, you would be considered a regular remitter and you would have to remit on a monthly basis. And there's also the accelerated remitter, and that's when you get above $25,000 of remittances. And there's two thresholds there, 1 and 2. I'm not going to go into a lot of detail, but essentially a regular remitter, which is the middle one there, remittances are due the 15th of the following month. So if you have a payroll, any payroll that you've paid your employees in October, the remittances are due and the reporting is due on the 15th of November. Moving on to GST. Again, there's different types of reporting that you could sign up for. One is annual reporting. And if you're an annual reporter, that's your annual report is due 3 months after your fiscal year end. I don't know if we have any lawyers here attending outside of Alberta. In Alberta, the Law Society forces all of your corporations, even your corporation or a partnership, you have a December 31st year end. So that means if you're an annual GST filer, your GST is due March 31st. If you're quarterly or monthly reporting, your due date is 1 month after the end of the reporting period. So that means that if your October 31st reporting period, then it's due on November 30th. Partnership returns. Of course, this is only for partnerships, otherwise known as a T5013. You are required to file those if you're in a partnership. If all the partners in the firm are individuals, your due date for T5013s is March 31st. If all partners are corporations, it's 5 months after the fiscal year end. So in this case, in Alberta, all corporations that are partners in a law firm have to be December 31st. So obviously you have until May 31st to file those T5013s. If you have a mix of individuals and corporations inside your partnership, it's the earlier of March 31st or 5 months after the fiscal year end of the partnership. Again, in Alberta, obviously that would be March 31st. For corporate tax, interest is charged on any taxes owing 3 months after the fiscal year end of the company, and penalties are charged 3 months after the fiscal year end of the company. So what this means, again, for a December 31st corporation, if you do owe taxes, if you make installments that cover the amount owing, then you do not have any interest penalties. You don't have any interest costs, and CRA will not charge you any interest. But if you file later than 6 months, you will have penalties. So those are the two thresholds there, the 3 months and the 6 months for corporate tax. Okay, Alberta Law Society compliance. Like I said, I'm sure most of you, if not, probably all of you are already aware of this. But every law firm, everyone that's registered as a law firm has to self-report by March 31st, following the December 31st year end. So this is an online report that you have to submit to the Law Society. If in addition, if you have a trust account, you have to either send a trust safety accounting upload by March 31st or do an accountant's report. Your accountant can also do a report by March 31st, two a little bit different reports, but you have to do just one or the other. You don't do both. And if you're in disciplinary mode, hopefully you don't get there, not very many do, but if you are, you could be required to do monthly reporting if you're in a disciplinary mode by the Law Society. You're also required retention of client files and other obligations. You're also required to retain for at least 10 years. And the responsible lawyer, so every law firm has a responsible lawyer that's registered with the Law Society as that person, is accountable for all the firm's filing requirements. So guess who they go after if the filing requirements are not met? They go after a responsible lawyer. And the last thing is penalties. So the Law Society will issue late filing penalties beginning after the due date and can reach a maximum of $1,500. So the penalties start one day after the due date, and the maximum is $1,500. If filing exceeds 3 months after the due date and fees remain unpaid, the responsible lawyer may be administratively suspended as of July 1st. So again, this is not a non-disciplinary suspension, but you still cannot practice law. So it's pretty serious to not file your reports on time. Okay, so now I want to talk about marketing. So I've got Tony Cafe. She's also part of our team. She's our marketing guru. And I'll just give you a little bit of bio on her. She started her career as a stats analyst at Vancouver Airport, where she advanced to managing the marketing for 13 airports within 4 years. Since then, she has added an MBA to her economics degree and a doctorate degree related to digital marketing, consumer behavior, and data collection. For the past 15 years, Tony has assisted hundreds of companies in North America with marketing research, communications planning, and strategic marketing. She is a passionate instructor at the University of Calgary and a published author of digital marketing strategies, which is available through Kendall Hunt. Her love of numbers has made her a CRO, conversion rate optimization expert in the marketing field. Today, she shares her insights as it pertains to the law industry. So I just want to say Tony is a great member of our team, and she couldn't be here today, unfortunately, but she did a little bit of a video recording, which we're going to share here right away.
Today, I'm going to talk about what every law firm should know about marketing when it comes to growing their business. I'll touch on these 5 topics, including the return on investment for your marketing spend, the omni-channel approach and what that means, traditional versus digital marketing, some trends in marketing today that law firms need to know about, and how you can get started. So ROI, your return on your investment, means how much money are you putting in compared to how much money you're getting out of your different initiatives. It's one thing to set your KPI, such as your key performance indicator for the corporation, for the business. So it could be 10% growth in our client base in the next 12 months, for example. That's great, but it's not actionable. We need to break it down into digital marketing or marketing tactics that we can then measure individually by looking at what's working, what's not working, and optimize our spend that way to get the best return. So some of the things we can do, and this is not an exhaustive list, but some of the key things for law firms is understanding organic search And that brings us to search engine optimization. How well your website, which is your storefront online, is showing up when people are looking for what you have to offer. And that's a few different components. It's complex in terms of the technical setup, what's going on within the website, and what links are backing or coming back to your website from, which I'll talk about in just a sec. And on top of that, we've got the artificial intelligence layer. Nowadays, we want to show up in those AI overview searches and other types of generative engine optimization, like showing up in chat and Perplexity. So all of that has to do with content. And that's the second point, how well your content is performing. So content is blogs and videos, campaigns for ads, for example, what's on those campaigns, your social media, your email as well. So through our content, we can build a brand perception in the mind of the consumer, which is the long-term enduring aspect of our marketing. It can be measured, but oftentimes it may not give us the return. It's more around branding and creating awareness. Now, email marketing in Canada, we have the Canadian anti-spamming legislation, and that means you cannot use people's emails unless they give you permission. And there are some gray areas, but this is commercial emails. But once you gather a bit of information about them, including their email address, it is legal to send them more information that inspires them and motivates them to refer a friend, or just continually learning more about your company and your services so you're top of mind. Now, online legal directories I find are very important for law firms. For one thing, they're that important backlink. You're sitting on a credible site that's referring back to your website, and Google really likes that. It's one of the contributing factors for good SEO. And getting on those legal directories also provides a sense of credibility to your firm. So definitely something to look for. You might already be a member at different associations, but online, if you can get your website on another credible site that links back to yours, such as directories, that's a really great strategy. And of course, ads. So ads need to be strategic. You need to know where your customer is, because you can spend a lot of money on Google ads, for example. The business of law is a very competitive environment. What we recommend is niching it to specific segments or geographic areas to get the best return on your investment. So there's Google ads where people have a high intent because they're looking for you, a high intent to purchase, versus display ads like that show up on social media. So those are those ads that show up while people are searching on the platform, and they just show up. But they can also be optimized in terms of who sees it, depending on the type of law that you practice. It could be for wills and estates. You want to target an older demographic or parents. All these things can be targeted within the Meta for Business, for example, and all social media platforms, actually. So being very intentional with your ad spend, because it can be costly, is very important. And you always want to measure the results to see what's working and what's not working. And that's how we optimize to get the best ROI. Now, that is super important to think about the different channels that you're sending out information, because it should be multiple channels that you're doing your marketing on, that achieve awareness at the top of the funnel. This is the buyer's journey. We call it the funnel approach. The top of the funnel is just generating awareness. The middle of the funnel is getting them to convert by generating interest and helping them to make a decision on purchasing your services. To the bottom of the funnel, after they take action, you want to maintain loyalty and get them to refer a friend or come back. So the different channels, multiple channels, need to be integrated. So that's what we call the omnichannel approach. No matter where your client or potential client is experiencing your brand, there's a consistency in how it sounds, looks, and feels. So creating content and creating tactics at all levels of the funnel is very important. I find a lot of law firms tend to focus on the top of the funnel, But that doesn't always bring you the best return because you're generally just creating awareness. We want to get to the middle of the funnel so we can measure the conversions, whether it's downloading something or signing up for something or booking an appointment. And then at the bottom of the funnel, assessing their loyalty, continually reaching out in order to keep top of mind. And we can measure all of those things again to see where you're optimizing in the funnel and moving money and budget to those areas. I want to talk a little bit about traditional versus digital marketing because where the needle is nowadays, if this is 0 to 100 on your marketing spend, the needle is about 60 or between 60 to 70% digital. But traditional is still important and still can be measurable. The beauty of digital marketing is that it is all data driven. But these are the tactics that you can see on the traditional side, television, radio, print for ads. We can do ads in a digital space as well through Google, social media, text ads, and retargeting. PR, media releases, celebrities, community building. We can also do that online. Social media, it's called social because it is kind of building a perception, credibility in the mind of the consumer online through your content and interacting. Also using influencers and online community building, all very doable in the digital space. In-person events are great for law firms. People want to get to know you and see you, participating in brand experiences, supporting causes. We can also do that online as well through virtual events and webinars. Now, sales promotions really don't work for the law industry because we cannot offer trial offers and coupons and discounts. So we won't look at that as a channel, but direct response, very, very good way to approach in the legal field. That means old school direct mail in the snail mail or postcards. So it's directly addressed to someone, so it's direct. We can do that online through email campaigns as well. And of course, personal selling, one-to-one doesn't, that is our word of mouth. That is building credibility and being authentic so people can see you and get a feel for who you are and what your company does. We can also do that online by collecting leads and following up with digital methods. So lots of different things that you can do. Now, taking a look at what's happening in the latest trends for law firms, everybody knows AI is here to stay. Looking at the new technologies, I know some companies, do not want to engage, but if you're not engaging, you're already behind. So learning a little bit about how to use technologies to automate things in marketing. So understanding your clients' preferences, who they are, creating content. AI can help in so many different ways, even ads and email campaigns to help us understand what people want so that we can deliver tailored and authentic client experiences. Now, if you're using a generative tool like Chat or Perplexity, you still want to humanize your approach. Authenticity is super important, and people can tell when it's AI driven. So do look at AI tools to look and help you with tailoring content for your specific audience because it really does come down to where your clients are. So be visible where your clients are and where they look for help. Be client-centric. Give your customers more of what they want. That's critical for law firms. So how do we get started? Well, first of all, you got to know where you're at. So track your current initiatives and look at benchmarks, whether it's historical data or industry benchmarks that are out there in terms of your marketing. So what's the cost per click? What's the conversion rate? What's the cost per acquisition per client? These things are out there for us to use as benchmarks, or you can use your own data. So where are you now? Set those metrics, your KPIs and metrics. Where do you want to go? That's your goals and your objectives. Are you focusing on the top of the funnel too much? Maybe we need to do some lead generation more, spending more efforts in the middle of the funnel, or building loyalty programs. So what are your objectives to tie into your corporate goals on the marketing side? Always be testing tactics and platforms that, try one thing against the other. Optimization is doing away with what doesn't work or improving it and investing more time and energy in what does work. So you're getting that bigger bang for your buck. Always be measuring. That's the thing that we need to do and that we can do, especially with digital marketing. We look to the numbers and we decide how to move our money around in order to optimize our budget on an ongoing basis so that we continually get that really great ROI. So that's it for me. And if you have any questions, you can always get in touch and we'd be happy to answer any questions that you have.
Awesome. Thank you, Tony. That's lots of information for us to absorb. Now, I want to do a little bit of a recap and get to what does peace of mind look like. So again, webinar one, we talked about removing yourself from the day-to-day work. We talked about the why. We introduced a 4-step program. We talked about org chart versus accountability chart. In webinar two, building systems and SOPs. We continued on step 3 and 4 of the 4-step delegation program. We talked about creating efficiencies through the use of the proper tech stack. Today, webinar 3, we talked about profitability, compliance, and marketing. We talked about a deep and narrow team so that your corporate structure and how to free up, especially the partners' time and how to put people in the right positions to succeed. We introduced the firm capacity planner. How efficient is your firm? We introduced target ratios. And Tony just finished talking about marketing for growth. So once you're able to put in processes in place to achieve all of this, that is what peace of mind looks like. And I'm going to give you a little bit of a case study. So this is a continuation of the case study that we introduced in webinar 1, followed it up in webinar 2, and now I'm going to tell you where they are today. So this is a Calgary firm in the Northwest. They started when we were introduced to them. It was 2 partners, 2 lawyers, 3 paralegals, 1 legal assistant, 1 administrator, 1 contract bookkeeper. They had $2 million in revenues, and according to our capacity planner, which I introduced you to, they were actually under capacity. Both partners at the time were working 55 to 60 hours per week. And of course, they wanted to reduce that. So where are they now? Well, they've been working with us for about 3.5 years. Once again, their team culture is drastically improved. We measure this by doing surveys from their team, from their employees, and they're the ones that are telling us that what type of team culture there is. They really appreciate that their responsibilities are clear and everyone knows what they need to do. They now have 2 partners, 2 lawyers. They've added a paralegal. They have 1 legal assistant still. They now have 2 administrators, and Crescendo is doing their bookkeeping. So they're budgeted to finish the year with $2.74 million, so about $740,000 increase in revenues, and 29% of the profit to the partners. Their growth is projected at 20% for 2026, and the partners are working 35 hours per week and taking 4 weeks off per year. So that's what peace of mind looks like, in my opinion. So what can Crescendo do for you? We don't have to do this, but what we typically recommend is we do an initial analysis of the firm. If you want to engage with Crescendo, we will do everything that we've presented. We will do an analysis on everything we've presented in webinar 1, 2, and 3. We'll review your cash flow and AR collections, including your retainer policy. We'll prepare initial capacity plan and determine overall firm efficiency. Melanie, who's part of our team, will come in and assess operation SOPs and processes. Our tech team will assess your tech stack and processes. We'll assess if you're up to date on all CRA filings. We'll review and assess bookkeeping, payroll, and GST. We'll assess your Law Society reporting efficiency and if you're up to date. Tony, as a part of the Crescendo team, will come and assess your SEO rankings and look at your marketing and see and do an assessment of that. Once we've done all of that as the Crescendo team, we're going to sit down together and we're going to determine what we believe your next steps or priorities should be. And we're going to present that to the partners/owners of the firm. Because the last thing we want to do is sell you services to do marketing when you're not efficient and you don't have proper SOPs. So we have to assess where you're at and determine what the next steps we think should be for your firm. And it's going to be different for everyone. So thank you for joining us. And now I think, Jose, I'm going to ask if there was any questions in the chat or if anybody wants to unmute and ask questions directly. See,
Yeah,
Greg already lifted his hand.
yeah.
I don't see everybody on here, so
I've
go
just got
ahead,
a
Greg.
quick question. Um,
Sure.
so obviously for the law firm case study you provided, it was about a 38% growth over the course of just like 3.5 years.
Yep.
Would you say that that is kind of what you've seen in the past and kind of what you'd expect to see that kind of growth for firms that would be within the realm of what you'd expect to have returns for folks interested in this service?
I would say so. I think that's typical. Now it can vary a lot, and again, it depends on the areas of law, and it also depends.
Of course.
A lot of that initial growth in the early stages before we got to marketing, because we had to work with that specific firm on a lot of other areas,
Hmm.
SOPs, for example. Um, But where the growth came early on is putting the right people in the right role. And
Hmm.
by having your client managers, freeing up some of your client managers' time by having the proper structure, allowed them to really focus on building relationships and getting a lot more referrals. So even
Okay.
before we started doing the marketing, it's freeing up the time for the right people to grow those relationships and really focus on growth.
Okay. Cool. That's perfect. Thank you. That's a great answer.
Thanks, Greg.
Chat looks good, Gary. I don't see any questions in there.
All right. Well, if there's no further questions, thanks again for joining us. And you can always reach out if you have any questions or if you want any templates or if you don't get the link, any of those sorts of things. But and we'll keep you in touch if for any future webinars. Thank you.